The WNBA's expansion is creating waves, but not everyone is feeling the impact equally. While adding new teams brings growth and fresh markets, it also dilutes the WNBA owners' share of revenue and equity, but not the stakes held by the NBA or a group of high-profile investors from a 2022 funding round. WNBA franchise owners currently hold 42% of the league, with the NBA controlling another 42% and the remaining 16% belonging to a strategic investment consortium. When expansion teams enter, only the WNBA owners' portion is diluted, meaning their share of league revenue shrinks while the NBA and investors keep their stakes intact. Sources familiar with the situation confirmed this financial structure, which was designed to protect long-term investors while still allowing for expansion. The 2022 investor group, which includes names like Nike, Michael Dell, Condoleezza Rice, and Laurene Powell Jobs, benefits significantly from this model. Not only do they retain their original equity, but they also receive annual preferred payments and their cut of 9-figure expansion fees as the WNBA grows. A league spokesperson explained that the distribution model ensures a fair allocation of revenue among stakeholders, with WNBA teams receiving a larger share of league distributions due to the operating costs they bear. Interest in expansion is high, with over a dozen groups vying for a new team. The WNBA originally planned to add just one more franchise but is now considering multiple additions, further diluting WNBA owners' stakes. Allen & Company has been hired to facilitate the process, which could reshape the league's financial landscape even further. The WNBA's previous equity split was 50-50 between WNBA and NBA owners. However, the 2022 deal carved out 16% for investors at a $400 million valuation, reducing the WNBA owner's stake from 50% to 42%. The arrival of 3 new teams, Golden State Valkyries, 2025, Toronto Tempo, 2026, and Portland, 2026, further shrinks individual team stakes from 3.5% to 2.8%. Despite these changes, WNBA teams do receive more than 42% of national revenue due to a complex formula that directs some NBA earnings to them. This is especially important with the WNBA's new TV contracts with ESPN, NBC, and Amazon, valued at $200 million annually, 6 times the previous ESPN deal. The league also expects to sell additional media rights worth $60 million or more. The financial boom has also led WNBA players to opt out of their current collective bargaining agreement, CBA, pushing for an equity-based economic model in future negotiations. With new teams, massive TV deals, and ongoing labor talks, the WNBA is entering a new era of business and basketball.